We have one empty chair, but anyways. So good morning. How's everybody doing? Great. Good. Is everybody awake and excited about fintech? All right. So my name's Daniel Kari. I'm the CEO and co-founder of a firm called Pactum Capital. We do over-the-counter derivatives and spot trading. We look at competitive things in the market and take advantage of those things. And the discussion today is obviously blockchain, bubble or beginning. I'm going to go ahead and let the panelists introduce themselves. They'll do a better job of that than I will. So,
I'm Saurabh Nayogi. I run a company called Wolk. We're based in the Bay Area in San Mateo. We are running a decentralized data exchange where data buyers and data sellers can transact about data. We're focusing on mobile advertising and digital marketing generally, where if you're a data seller and you know something about this ID with its attributes and values, largely about emails, phone numbers, and mobile device IDs, you can upload it to our data exchange, and data buyers can then get access to information about that ID. Basically, it's a token-backed data exchange where the tokens are an essential part for how data suppliers can monetize their data.
I'm Jack Saba, also in San Mateo. I am the co-founder of Day One Investments and Day One Consulting. We believe that regulations and sufficient infrastructures are going to stifle innovation and implementation for the blockchain. So what we're working to do is create partnerships in emerging markets to invest in these startups and then bring them into emerging markets to get them out of the proof of concepts, out of the labs, and into the real world and battle tested. So we're working predominantly in Papua New Guinea right now. We just established the Pacific Blockchain Center, which we're really excited about. And the goal is to spread the blockchain through the APEC community, and then when it's ready to scale and come back into finance, healthcare, insurance here in the United States, be able to bring it back this way.
Hi, I'm Margot Avedisian, New York. I've been in blockchain since 2012. I relaunched the first American Bitcoin exchange. Then I co-founded two others, which pivoted and are still around now, Alpha Point and Monetigo. And now I'm executive vice president at Transform Group. And we do PR mostly for blockchain companies and ICOs. We've done over 40 ICOs, including the first one, MadeSafe. We also did Ethereum, Golem, Gnosis, Bancor, a lot of them. And also we've represented over 100 blockchain companies.
Hi, I'm Cyrus Kejvandi. I'm the co-founder of Mobius. We're a team of researchers, computer scientists, and engineers from Stanford. And we're building the first global completely decentralized NASDAQ for real-world data, and a lot of it is patent pending, and we're actually creating what on a high level is a fully autonomous smart market for every piece of real-world data, and we're rapidly growing, and we're happy to share more once the details are fully filed and patented.
So I know I've talked to a number of folks here in this room, but let me just gauge who here is working on a company that's utilizing blockchain right now. Anybody? Okay. Anybody here looking to integrate blockchain technology into their business? Okay. So I think the one thing I want to start with is talking about applied uses. My firm, one of the things that's really interesting about blockchain is we're purely a financial play, but one of the things that the blockchain allows us to do is we can actually verify collateral from our clients on the blockchain. If they send us a small transaction that they control that address, we can actually verify that they have the amount of cryptocurrency that they say they do, which is a really good use case for us from a risk perspective. So that being said, with my company Pactum, let's talk about, and we'll start down at the end here, let's talk about the applied uses of blockchain and how you're using it, and then we'll start talking about beginning or bubble. We'll go with that.
So we're working on something completely new. I think a lot of the researchers and developers who are just entering the space, it's very larval, and a lot of the focus right now is just developing ERC20 tokens and smart contracts in that ecosystem. right now it feels like a lot of them are still trying to find a really strong use case. Our vision for the future is something that we're pioneering, is creating a smart market where you have fully autonomous smart contracts with AI that can actually transact and process real world data. Because our thesis is pretty much data is really like the new oil. If you think about it, Google, Facebook, Amazon, Apple, they currently have maybe around 12 to 1,500 petabytes of data, and that's all completely centralized in legacy infrastructure. And they're able to process that data into keen predictive insights and ad revenue and other use cases. And what we're trying to do is take it to the next level. Smart contracts are extremely larval right now, and with time, we really think they can be fully autonomous actors that can disintermediate a lot of not only siloed and legacy data products, but also major industries to actually process it. So the analogy is sort of like, you can take oil from Saudi Arabia, but you can't actually process it in your car right now. You actually have to synthesize it chemically before usage. And much in the same way with data. And we think fully autonomous smart contracts in a smart contract can do that in the future.
So we have, I think, a little over 20 companies we're representing. So pretty much in every industry, it's being disrupted. So all of those companies that he just mentioned, they're companies that are doing a decentralized version of that. There's a company called Plurchus, which is basically a decentralized Google. So there's not this intermediary that's making money off your data or changing the algorithm so that they can increase their profits. There's another company called Propy, which allows title registry on the blockchain, and you're actually able to purchase property in the Ukraine and soon to be other countries using their token, which then is associated with property and ownership. So everything pretty much is out there, even selling mobile data. There's a company doing that. So really blockchain is integrating with companies that already exist as well. There's a company called Unicorn. They're the largest esports betting company in the world, and they are doing a token sale that Mark Cuban's part of and allowing people to bet in jurisdictions that it's harder for them to get a bank account in. So we're seeing it in companies that already exist trying to integrate blockchain, but people are just starting from scratch and creating anything you can name decentralized. And we're seeing an explosion with that, and especially with all these ICOs going on.
So we really look at this technology as an infrastructure. So it's not the currency, it's not the other things, it's the ability to do things more efficiently and effectively. If like we were to start over in finance or healthcare, what would the systems look like today? That's what we're really interested in, but you can't do that here right now. So what we're working with, say for example in Papua New Guinea, the bond market is completely pen and paper. Everything is done by pen and paper. So there's no secondary market for the bonds. There's hardly a primary market for it. So if you can build and digitize the asset initially, you can then be able to create a secondary market, sell pieces of the bond at fractions to people that wouldn't be able to purchase large shares of it. So we're looking at opportunities that require really low friction of implementation and are already developed, which is a really hard combination to find right now because I'm very long on the blockchain. I think that it's going to be taking soon, but there are still a lot of development challenges in the ecosystem that we need to address. So we're looking at things like supply chain management and what that can do in emerging markets, which is really exciting. And identity is one of the first places that we're starting because it's a fairly easy solution to get to know the people at the end of the transaction, and then from there you can build it back out. So there are very few real implementations right now, but I think we're going to be seeing more this year. I think there's going to be a lot coming this year. Things are going to be coming out of the labs and into the real world.
So I guess our group fell in love with Ethereum and smart contracts at the end of last year, which feels like a long time ago now, given how quickly the industry moves. So
It was a long time ago.
a long time ago, yes. So we're ad tech guys in our group. So we basically said, hey, is it possible to write an ad server? Is it possible to store 1 terabyte of consumer information in Ethereum smart contracts? And we were actually very sad that Ethereum could only support a small number of transactions per second, and we were like, this is crazy. We would call the transaction cost would be too high. So we actually fell in love with another Ethereum project called Swarm. It's a peer-to-peer storage machinery, and so when we talk about blockchain, there's lots of different kinds of concepts. There's the abstract concepts of decentralization, which is at the heart of what we're really doing in our decentralized data exchange, and then there's sort of these narrow things of smart contracts, which have a lot of scaling challenges. So what we're seeing, and technology-wise, is a lot of bifurcation into here's what you can do on the blockchain cost effectively, and if you actually try to build XYZ applications, it's almost impossible to do it efficiently. And so what's happening is all these new technology things that engineers who want to work at scale with consumer applications, they have to sort of push things off chain. And we're basically wrestling with a lot of technology challenges as an industry. Is how can we do things to compete with the centralized services at the core? Yeah.
So I'm going to disagree with you a little bit there, because Ethereum's not the only platform you can build on top of. There are a bunch now out there. Quantum is one that's it's a fork of Bitcoin, and you're able to port over smart contracts from Ethereum onto it, and they're also you're able to do it on mobile, and so they're going to be the first proof of stake on mobile. There's another blockchain, Eternity, which is way more scalable than Ethereum. A lot of things are on state channels. So there is this technology out there. I think people learning and finding out about it is probably part of the challenge, and that's part of what I'm working on, getting it out there in the press. But really, anything you can think of, it's pretty much possible to decentralize.
Yeah, so just a quick question. How many of you still use AOL? How many of you still use AOL?
I still use AOL.
Really?
No.
Okay, that's why I never get your messages. When we were actually building Mobius, one of the major structural considerations we were making is that, ERC20 tokens are just highly inefficient as they are right now. And in fact, it's not even a real blockchain because they violated the first definition of what it is. It's immutability. They already had a hard fork that has occurred, and they're actually planning on having another one with Metropolis. One of the major considerations we're making when we're building Mobius is that we need something that can handle our transaction volume because we're live right now. And so as Ethereum, as it stands today, it's only 13 transactions per second. Imagine using Google. Only 13 people in the world can, process a search query every second. It's just completely untenable and not sustainable. In addition to that, gas fees are ever increasing. They're 20, 30 cents, and it's very slow. So this is very comparable to what we currently have with credit cards. So there's some major structural issues with Ethereum, and this is coming from me. I'm an early adopter of Bitcoin and Ethereum Classic, and so these things need to be fixed. And on top of that, the development for engineers, it's quite suboptimal. It's sort of like learning building a website in the mid-90s. You have to learn HTML line by line, secure it, set up your server. Same thing with Ethereum. Very difficult for engineers to connect. And that's kind of what we do with Mobius. Like my co-founder and I, when we're working on this at Stanford, are like, wow, this is really difficult. Let's make it really easy. So right now our MVP is sort of like Stripe for blockchain. We have a fully published API, and developers are already using it, and they're kind of amazed that they don't even have to learn Solidity to connect. And they're even more surprised to learn that we're actually building on top of Stellar because it completely resolves a lot of these fundamental issues on ERC20 tokens and Ethereum. And that's where I see it. It's just not going to last. In fact, every addition and new code release is additional attack surface. And it's happened before. There's nothing prohibiting it from happening again, especially with this upcoming hard fork with Metropolis.
So you're basically telling everyone to sell their Ether. It's dying. Ethereum's dying.
In no way am I giving any kind of advice in that area, but I'm saying there are the blockchain is really quick. It's very dynamic. It's fast moving, and I think people tend to follow the crowd a lot on this. And there are better protocols. In fact, that's why we're on Stellar. Jed McCaleb, the founder of Ripple and the co-founder of Stellar, actually approached David and I, and he really spoke to our heart into the technical merits and inefficiencies that are inherent in the fastest growing blockchain. Well, no longer a blockchain, Ethereum. So this is something that we took into consideration when building something that's truly to scale.
Let's get the mic down here. I guess I'm obligated to ask this question because it's the name of the panel, and I guess is blockchain a bubble or is it the beginning? The word bubble is interesting. My company, we're obviously very much into these financial markets, and we're very much in a hyper bull market for cryptocurrencies. So it is a little bit, I would say it is a little bit of a bubble on the financial side. But my personal opinion is that blockchain isn't going anywhere. It's probably not a bubble. And we are really at the very beginning. Many of you probably have come to this conference and thought, oh, I missed out on Bitcoin. I missed out on Ethereum. You haven't missed out on anything. We're still in the first inning of all this stuff, and it's really interesting. So I encourage any of you who are here to do the research on some of these platforms like Ethereum and Stellar, Quantum, and so on and so forth. I'm digressing, but so let's get the opinion of the panelists here. Are we in a bubble? Is this the beginning, or is this the beginning of a bubble, or is this? Jack, we'll go with you and then bring the mic down and back. Yeah.
So there's so many different areas within the blockchain ecosystem, right? Like you've got the ICOs, which are raising incredible amounts of money with very limited development already. So in that respect, I think that the ICOs are in a bit of a bubble. I think a lot of the companies that have raised this capital are going to fail ultimately. But I think that some will come out winners. And I think that the idea of ICOs are here to stay. That is an incredibly effective way to raise a lot of capital from your future users, which is really interesting. So I think we're in the beginning of a bubble with ICOs. But the underlying technology, the blockchain, is 100% here to stay. The challenges that you were talking about, the limitations of it and the development challenges are just fundamental to being an early stage product. And that's everything. And I think that the Ethereum in particular has a very strong and responsible roadmap. And I think that when they do things like a hard fork for these development processes, I think that's necessary. I think that it's responsible to the degree that I think corporations can say, hey, these are who we want to work with, because as we face these challenges, we know that we have a core dev team that's going to understand what it takes to bring us from where we are to where we want to go. So I think that there are some really big use cases that people are tackling, and I think those are interesting. I think they're a little far away, and it's a little too early to be going after those. I think the ICO fundraising model is here to stay, and I think the blockchain is here to stay as well, but it's very much in the early days, and there are a lot of challenges ahead, but it's got to be done and produced in a responsible, effective way.
So I guess I was a young 20-year-old in the 90s, and I have many people who work for me now who are in their 20s, and then they have no idea what this bubble thing in the 90s was all about, right? And so the funny thing about this, the bubble concept is that, after the bubble sort of popped, there were all these, oh, do you realize there was this pet company, pet food company that, raised a ton of money and then they went out of business, right? And then just in the last couple of years, there's been a bunch of pet food companies, right, who sold to the pet companies that we know about. Petco bought Chewy.com is one of the major success stories in e-commerce. So a lot of the things that we thought were stupid, dumb ideas in the bubble of the last bubble are actually working functional concepts that are massive success stories now. So I think that's probably going to be what happens in the next phase, like all these blockchain failures that will kind of ride up and say, oh, that was a dumb idea in the year 2017. Probably in 10 years from now, we'll say, well, gosh, that idea, had it been, it was just too early. So it's not that pet food is a dumb idea to have turn into an e-commerce company. And I think we'll look back at some of the things that we said, oh, that was a block fail. It'll change very quickly.
Send it down to Margot there.
Sure. I agree mostly with what you said. Blockchain, we're not in a bubble. Major Fortune 500 companies are integrating with blockchain. Microsoft just made an announcement. ICOs, yeah, we're definitely in a bubble there. When someone raises $200 million and they don't even have a demo working, that's pretty crazy. And once we start seeing these companies not build anything with all this money they raised, I think that's when it's going to start popping. And when regulation starts becoming a little more strict. But until then, I mean, there's just so many companies doing it. It's kind of crazy. So we're definitely getting to the height of it when I get pinged by 15 companies a day wanting to do an ICO, or companies that don't even have any sort of blockchain component wanting to raise money for their record label in Oakland. I'm like, you need to have some sort of blockchain. It's not just to get free money. And with ICOs, it's not as easy as you think. There is a lot of scrutiny. There's a lot of transparency that's involved. People are giving you money and they hound you incessantly, wondering, what are you building? What are you doing? So it's a very interesting time. And in terms of Bitcoin, I definitely think it's going to go way up. So you can still get in. It's not too late. But blockchain's definitely here to stay. So I think it is the very beginning of it, and we'll see if Ethereum lasts. If it doesn't, if he rang the death knell over here, all of those companies that built on Ethereum, then they're essentially going to die too.
That's pretty pessimistic. That's like anti-bubble talk.
Yeah, so I think fundamentally everything runs on a cycle, from our circadian sleep rhythm all the way to market cycles. And right now it feels like we're at the beginning of one cycle, at the end of another, depending who you ask. Maybe we're leaning towards the end of a sovereign debt bubble in terms of bonds. Maybe we're nearing towards the end of non-performing loans in China for real massive centralized real estate projects. But regardless, if we're harkening back to the dot-com bubble, the internet is still here. It's just the landscape has changed dramatically and the use cases have changed dramatically. The often cited pets.com, it didn't work, or this random food delivery didn't work simply because of market penetration and engagement. There's just significantly less people using the internet back then. There's a lot more using it now over time. The proliferation of technology spreads, and there's much higher engagement in mobile. So how does that translate over to the realm of blockchain? The thesis there for my team at Stanford is like really just we're at the beginning stages of mass proliferation in smart devices that will actually transmit real-world, real-time data. And this data, like oil, needs to be processed. So these oracles are emitting a lot of data. And our vision is like the smart contracts will actually be able to process this data into keen predictive insights, say for a fab in Shenzhen, and saying, hey, this mission-critical piece of infrastructure has a 70% probability of going out in 2 weeks. Here's the blockchain, exactly where, when, and how much you can source it for, and it's completely untampered, and you have that choice. And you can completely disintermediate any non-inventory carrying broker. So the use cases are going to emerge as the infrastructure has built itself out, and already we're really early, but it's already the early stages of being production ready. And it's just picking the right ecosystem to scale.
So with all this hype and excitement, I want to ask the panelists, where do you guys go to find good information about what's going on? Where can people go and get good information about what's happening in this market? What's a good place to start? Because I know there's a lot out there. I would personally say I'm biased because I'm a former employee, but CoinDesk, which is here based in New York, which is a great team. That's pretty much it's a good resource to read about what's happening in the market, and so I would advocate for that. But I guess for you guys, you've spent a lot of time in this industry. Where do you go to find out information about what's going on in the market? what's real, what's not.
I guess I'll start there. Definitely, it just takes a keen eye, and you have to do a lot of your own research and develop your own, your own line of thinking. Definitely, you really have to scrutinize what everyone's saying in the mainstream and just dig a little bit more on a technical basis. Like, all the rage, people are building ERC20 tokens, but I stop and think and look at the protocol and the structural inefficiencies. Like, why are people doing this? Is it because they're generating a speculative asset? Don't they know that this can't really scale at its current state, and that even with renewing hard forks, that's only exposing significant attack surface that threatens the very existential state of that non-block state. So, yeah, just doing your own research, I think, is very critical, and not falling into groupthink. That's a large degree part of it. And I think the blockchain space as a whole came, like Satoshi Nakamoto, I mean, the whole reason it was created is because interest rates were artificially suppressed towards the lower bound for so long, so he created a digital version of gold. And now it's time to process data, which is the digital version of oil.
You're ready to say something.
He's very into data over here. Everything's brought back to data. So it depends what you're looking for what you want to learn about blockchain. CoinDesk is definitely a good resource, but they really have a policy on not writing about ICOs unless you have someone really well known or famous part of it. But for the most part, if you want to learn about ICOs, the information comes to me. And I read a lot of white papers. You could go to ICO Countdown. It tells you all the different ICOs that are happening. You go to their sites and read the white paper. It's probably going to be really boring, but you'll at least get a sense of what they're trying to do. And a lot of these companies have Slack channels. You can go on. You can ask questions. You can see what other people are saying. Bitcoin Talk is another place to go if you really want to get in the nitty-gritty of what people are saying about it. And mainstream media, they definitely don't really write that much about ICOs. So if you do see something in the press about it, then most likely it's been vetted at some capacity and has notable people with it. Reuters does a really good job of writing about some token sales. Gertrude here, she's awesome. She writes a lot about blockchain stuff. So there's a few writers in the mainstream that have a good grasp on what is going on in the blockchain scene, and they write about it. Not all of them get it right, but yeah, definitely doing your own research and reading white papers if you're really interested in Twitter and things like that.
So she's definitely right with a lot of the mainstream media. They hit a lot of things well, and they miss a lot of things or misinterpret quite a few things. I don't always agree with everything they have to say from an objective standpoint. So what's different about this space than every other space is when someone does something unique, new, or launches a company, they write a white paper, which is a very full detail of what they're doing, how they're applying the technology, and where it's going. So I would start there to get a really strong base knowledge of where this can and cannot be applied, and then go read CoinDesk. I think CoinDesk has some of the best readers and thinkers in the space. I very often find myself agreeing with what they have to say. So I frequent them because they turn out the best content regularly. And then whenever I see something pop up in New York Times, Washington Post, or the other media sources, I'll read that as well.
It's kind of ironic that we have trustless things behind the essence of blockchain, but it's actually coming to events like this where we actually meet a lot of really cool people and talk with one another. In the Bay Area, we have a couple of meetups. So I think probably there's something similar in New York that'll spontaneously build up stuff, and I think basically reputation and just talking to one another is actually one of the best ways to find out about and educate one themselves. It's just the personal reputation of one another that we can rely on that's still there, and then I don't think the fully trustless model really works. We have to rely on each other's reputations and brands to propel things forward.
Yeah, I really liked the meetup thing. San Francisco has two really well-known meetups: the San Francisco Bitcoin Meetup and the San Francisco Bitcoin Dev Meetup. I've been in this industry for 4 years, and I still go to these meetups because they're so valuable. When I was coming to New York this week, I actually did go on Meetup to look and see if there was a Bitcoin or Ethereum meetup I could attend. So it's really helpful because The curators of those events usually bring high quality speakers that can really talk and reflect on what's happening in the market and in the technology. And Margot, you have something to say.
Yeah, and definitely check out conferences too, like this. If you're interested in investing, I'm going to plug mine, Coin Agenda. We have it in Vegas, October 24th to 26th. We have a lot of ICOs there, investment funds, and it's a way to really meet people who are actually doing this. And everyone keeps pumping up CoinDesk. I do want to say they were pretty mean to EOS when they wrote an article about them, and EOS is a sponsor of this conference, and they're pretty awesome. So just wanted to say sometimes CoinDesk isn't always right.
On that note, Dan, you want to wrap us up with something a little bit more upbeat than CoinDesk isn't always right?
Yeah, how about that Bitcoin price, huh?
So it sounds like we have a lot to talk about. We have an awesome opportunity, and our panelists, I'm sure, will be around for at least a few more minutes, if not all day.
Thank you.